Dear students, welcome to my channel. Through this video, let us discuss the preparation of balance sheet. If you are watching this channel for the first time, please subscribe it. In continuation with the discussion that we had with respect to the preparation of final accounts, this is the third statement, that is balance sheet, which is prepared to know the financial position of the business organization. Everyone start the business to earn profit and they wanted to know the financial position of the organization. So to know the financial position, they have to prepare the balance sheet. So balance sheet contains the various sources of funds raised in the form of capital, borrowings, as well as debts. So we can say the balance sheet is a statement which contains the sources and application of funds. It may be from internal sources or maybe from the external sources. And it shows the liquidity as well as solvency of the organization. It contains two sides, that is said to be the asset side in the right hand side and the liability side in the left hand side. It is not an account, it is a statement. This statement contains two sides, that is asset side as well as liability side. In the liability side, mainly there are internal sources of fund as well as the external source of fund would be represented. It may be fixed liability or maybe long-term liability, or it may be current liability, or it may be a contingent liability. So what's a fixed liability? A liability which is having in the nature of fixedness needs to be repaid at the time of its dissolution. Such type of liability is said to be fixed liability. For example, capital. The capital is the amount contributed by the businessman to start and run the business. So he will be repaid only at the time of the dissolution of the organization. So we can say that capital is a fixed liability, needs to be set off only at the time of the winding up of the business. Second is long-term liability. It is just like fixed liability, but the periodicity may be little lesser, but it is fixed in the form of debentures, long-term borrowings, bonds, etc. could be considered as fixed liability. Similarly, current liability. Current liabilities are types of liabilities needs to be set off in the near future. For example, creditors, bills payable, outstanding expenses, etc. could be considered as short-term liabilities or current liabilities. The next category is contingent liability. Contingent liabilities are not liability at the moment, but in future it may be turned to a liability. Such a liability is said to be contingent liability. For example, suppose a case is there in front of the court, and if the judgment becomes unfavorable to the entity, then we may need to pay the compensation. That compensation would be set off in the future, may be termed as contingent liability. So I can say that at present these are not liability, but it may be turned to liability in future. Such is said to be contingent liability. Here the assets are classified on the basis of its permanency or the basis of its realizableness. If asset which is realizable in a long-term periodicity and the assets which are bought for increasing the earning capacity is said to be fixed asset. For example, land, building, furniture, plant, machinery, etc. bought are considered to be fixed assets. So these types of assets are bought for increasing the earning capacity, and it is not intended to realize in the near future, and normally it will provide income for a long span of time. Mostly the fixed assets having a large value, huge value in nature. Current assets are types of assets which can be easily realizable. For example, stock in trade, debtors, cash in hand, bills receivable, etc. are example for current assets, which means which is easily realizable in a short period or a short span. Next is tangible assets. Assets which we can see or touch is said to be tangible asset. For example, land, building, furniture, machinery, etc. Next is intangible assets. The assets which we cannot see or touch is said to be intangible assets. For example, patent, copyright, trademark, license, franchisee, goodwill, etc. are example for intangible assets. Next is fictitious assets. Actually, these are not assets, but written in the asset side of the balance sheet. It is just treated as asset. For example, a large amount spent on preliminary expenses. So it cannot be written in the profit and loss account. So it cannot be absorbed in a year or so. So it will be written in the balance sheet asset side and will be absorbed in a span of years. So such asset is said to be fictitious assets. These are not actually asset but just written in the asset side of the balance sheet. And next type of asset is wasting asset. Due to its consumption or due to its usage, which will be exhausted during over a period of time, such an asset is said to be wasting asset. For example, quarry, mining of natural gases, mining of natural resources. All these are example for wasting asset. And finally, the last type of asset is liquid asset. These are part of the current asset. The asset which is classified based on its liquidity, which means the base of its convertibility into cash. Such an asset is said to be a liquid asset. The most liquid asset is cash. Then the next one is deposit with the bank. Likewise, we will be prioritizing on the basis of its convertibility into cash. Such assets are said to be liquid asset. The asset which could be converted into cash in a fast manner, very easily, such asset is said to be the most liquid asset. So while preparing the balance sheet, we need to understand all these terminologies. As I have told you, the balance sheet contains various assets and liability. Liability will be written in the left hand side and the asset will be written in the right hand side. So there is a pattern or order of writing the assets and liabilities in the balance sheet. The assets and liabilities may be written in the order of liquidity or on the order of permanence. So such a process is said to be grouping and marshalling of assets and liabilities in the balance sheet. So let us understand how the assets and liabilities will be written in the balance sheet in the order of liquidity as well as in the order of permanence. So here in this balance sheet, the assets and liabilities are written on the basis of its liquidity. See here, first liquid asset in which cash in hand and cash at bank, then floating asset, sundry debtors, investments, bills receivable, stock in trade and prepaid expenses. Then in the fixed assets, machinery, land, building or land and building, furnitures, fittings and fixtures, vehicles, motor car, etc. Intangible asset, goodwill, copyright, patent, trademark, license, franchisee or royalty is written. Then in the fictitious asset, a large amount spent on advertisement or preliminary expenses are written. Similarly, in the liability side, current liabilities, sundry creditors, bills payable, bank overdraft. And in the long-term liabilities, loan from bank, debentures or borrowings are written. In the fixed liabilities, capital is written. So here in the sample balance sheet, it is written on the basis of the liquidity. If we reverse it, if we write on the basis of the permanent, in the sense that this fixed asset will come first, then the floating asset, intangible asset, and finally the liquid asset in which the last item will be the cash in hand. Such a method is said to be writing balance sheet in the form of permanence. So the permanent item will be written first and the liquid item will be written last. That is another method. So my dear friends, here we have learned the preparation or writing or marshalling or grouping of item in the balance sheet. So this balance sheet is prepared to know the financial position. This is not an account, this is only a statement which will be automatically get balanced if we total both the side of the balance sheet, that is liability side and the asset side. We need not balance it, we need not carry forward anything, we just enter all the assets and liabilities in the balance sheet, then the total will be same for the both the side. Here I invite your attention on the accounting equation that we have discussed in the initial days of our discussion, that asset is equal to equities. Here the asset is equal to equity. This is the intention of writing that accounting equation to make the balance sheet tallied, both the asset side as well as the liability side. Here the assets are equivalent to equities. Equity means it may be owner's equity or it may be creditor's equity or it may be outsider's equity. So all the assets are equivalent to the borrowings. The assets are equivalent to liabilities. The assets are equivalent to owings. The assets are equivalent to the amount to be paid off by the business entity. Hope the concept is clear. And let us start with the preparation of the final account, trading, profit and loss account and balance sheet in the next video. Thank you very much for watching.